How are 529 college savings plans treated on FAFSA? Are you curious about how your 529 college savings plan affects your financial aid when filling out the free application for federal student aid? Understanding this can make a big difference in how much aid you might receive. Let's break it down in simple terms. A 529 college savings plan is a special account designed to help families save for education costs. When you fill out the FAFSA, you need to report the value of this plan as an investment asset. However, how it is reported depends on who owns the account. If a parent owns the 529 plan, the total value is considered a parental asset. Parental assets are evaluated at a lower rate than student-owned assets. In fact, only a small percentage, up to 5.64%, of the value of a parent-owned 529 plan is included in the calculation of the Student Aid Index. This means that having a parent-owned 529 plan has a minimal impact on a student's eligibility for need-based aid. On the other hand, if the student owns the 529 plan, it is reported as a student asset. Student assets are assessed at a higher rate, which can significantly reduce eligibility for need-based aid. Fortunately, most 529 plans are parent-owned, which is the more common situation. Now, let's talk about the earnings in the 529 plan. Any interest, dividends, or capital gains earned in the account do not need to be reported as income on the FAFSA. This is an important point. While you report the account balance as an asset, the earnings themselves do not count as income for financial aid purposes. When you withdraw money from a 529 plan for qualified education expenses, those withdrawals are also not considered income for either the student or the parent on the FAFSA. This means that using funds from the 529 plan to pay for tuition, fees, books, supplies, or certain room and board costs will not negatively affect financial aid eligibility. Colleges and universities relying on the information provided in the FAFSA to determine a student's financial need and eligibility for institutional aid. The way 529 plans are treated ensures that families who have saved for college are not unfairly penalized while still allowing for a fair assessment of financial resources. It is important for families to report all assets accurately on the FAFSA, including 529 plans. This transparency helps ensure that students receive the correct amount of financial aid based on their actual financial situation. The minimal impact of parent-owned 529 plans on financial aid eligibility means that saving in these accounts is a smart strategy for many families. Understanding how 529 college savings plans are treated on the FAFSA can help you navigate the financial aid process more effectively and make informed decisions about your education funding.